Let's talk about the future, and for our audience, of course, there's still a public float out there. You are the control shareholder, and your group is certainly. 3 to 5 years for growth, I think, is what you said yesterday. You sort of were pointing to people that. So what does that mean for the next couple of years in terms of what the future holds for Paramount? Is it just about reorganizing, restructuring, trying to save money?
So I would say is like one, we've announced obviously $2 billion in synergies. We're not giving formal guidance today. We're going to do that on our Q3 earnings call. I can tell you those, obviously we will significantly exceed that number. But I'll also say you can't cut to grow, right? Like that, I think we've seen that's a business model that doesn't work. And so what we're going to do is restructure our business to run significantly more efficiently. And then we're really going to invest into our growth areas like studios and streamings and sports.
Right.
And I think what's important between my family and our partners with Jerry Cardinale and Redbird, we own 70% of the economics of this business. So we are focused on one thing, which is truly long-term value creation.
So you're not going to pay attention to the stock price, I wouldn't think, then?
What I would say is we're not going to be in the business of basically managing for the short term. I think if you look at media as a whole, the analogy I kind of like to use is, two things. One, all linear is not equal. I think if you look at broadcast and the power and reach of broadcast and CBS, which is where a vast majority of our linear value is, that's actually not declining or declining very slowly. Cable is obviously being replaced by direct-to-consumer.
Yes.
And so fundamentally, we have to be in the business of becoming a scaled streaming service and replacing our cable business. That absolutely does have to happen. And we're going to invest in more content to be able to get there. We're going to invest into technology to be able to get there. And I do believe it's going to be that combination of great art and storytelling working hand in hand together will ultimately transform the business.
Right. Well, you mentioned, obviously, Paramount Plus is your direct-to-consumer offering, or at least your main one. And it is subscale now, 77 million or so subscribers. Not insignificant. But how do you get to scale? Because you're spending all that money on content, it's obviously a lot better to spread it over a much larger subscriber base.
Yeah, what I would say is we're really excited with actually where we're starting with Paramount Plus, and actually want to be really complimentary to the team and artists and filmmakers and the company that we just acquired. I mean, when you look at the content Taylor Sheridan is creating is truly best in class. Our sports partnerships with the NFL. If you go back to Q4 of last year, when you look at the top 10, according to Nielsen, between the Paramount content engines and the Skydance content engines, we had 40% of the top 10 originals according to Nielsen. So we're going to take those content engines and use that to power our platforms, which we think will make us incredibly competitive. But what we also need to do is really rebuild, and we have a great foundation, but I believe we can significantly improve the user experience for Paramount Plus, and really how our overall tech stack works.
So that will add the subscribers that conceivably you need to take you out of sort of being the smaller.
Very simply, you need to increase engagement. That comes down to content and storytelling.
It does.
Like you actually you need to have more, and you need to have a better platform to create a better user experience. It's a combination.